6 major Social Security changes are hitting in 2026. And while everyone is focused on the raise, the real story is in the new tax math that could cost you thousands if you aren't paying attention. Let's get straight into the numbers, starting with the good news, the cost of living adjustment. The 2026 COLA is confirmed at 2.8%, and on paper, that looks like a win. If you receive the average benefit, your check is going from roughly $2,015 to $2,071, and that's an increase of $56 a month. Over the course of the year, that puts an extra $672 in your pocket. But before you spend that money, you need to understand change number 2, because for high earners, the government is taking some of that back. Change number 2 is the wage-based increase. And for 2026, the amount of income subject to Social Security taxes has jumped to $184,500. And that is a significant hike from last year. If you earn over that limit, you are going to pay an extra $520.80 in Social Security taxes this year. However, there's a silver lining that most people overlook. Once you earn over that $140,000 cap, the 6.2% tax stops coming out of your paycheck. So, if you're a high earner, look for a hidden raise in your paycheck later in the year once you cross that threshold. Now, let's talk about the biggest opportunity in 2026 that I'm really excited about. Change number 3, the senior deduction strategy. This is where the math gets really interesting for retirees. For 2026, you're looking at a potential triple stack of deductions that can wipe out a huge portion of your tax bill. First, you have the standard deduction. Second, if you're over the age of 65, you get the senior bonus added on top of that. But third, and this is the big one, this is the new senior tax deduction of up to $6,000. Here's how the math works for a single filer. If you stack that new $6,000 deduction on top of your standard deduction, you could shield a massive amount of income from the IRS. But there's always a catch, the phase out. If your income is under $75,000, you get the full $6,000 deduction. Sounds great. But if you earn between $75,000 and $175,000, that deduction starts to disappear. For every dollar that you earn in that range, the deduction gets smaller. If you have an income of $100,000, you lose about 25% of that deduction. And this is why we tell our clients, managing your adjusted gross income is the single most important thing that you can do this year. Number 4 is the earnings test. And I want to clear up a major misconception here. If you claim benefits early in 2026, before your full retirement age, and you keep working, the limit is now $24,480. If you earn over that, they withhold $1 for every $2 you earn. But, and this is critical, you do not lose that money. It's not a tax, it's a deferral. Once you hit the full retirement age, Social Security recalculates the benefit and pays you back for those withheld months over time. So don't panic if you trigger the limit. Just know your cash flow will be temporarily lower. This leads to number 5, and this is for those still working part-time. The cost of work credits has spiked. It now costs $1,890 in earnings to get just one Social Security credit. That means to get your maximum 4 credits for the year, you need to show at least $7,560 in earned income. If you're managing your own business income to keep taxes low, make sure you don't drop below that number or you will score a big 0 for the year. And finally, number 6, the gotcha, Medicare Part B. While your Social Security check is going up by 2.8%, Medicare premiums jumped nearly 10%. And if you're on a fixed income, that premium hike eats up a significant portion of your COLA raise. That's why relying solely on Social Security is dangerous. The net number is the only one that matters. With the new tax brackets and deduction phase out in 2026, you need a plan that looks at the whole picture. I'm Tony Hansman from Guardian Financial. If you want to see exactly how the triple stack deduction applies to you specifically this year, just simply reach out to us. We're a licensed professional, I'm a fiduciary, and always please remember to consult a licensed professional who understands your specific goals and dreams.